Welcome to denome and welcome to this deep dive research into staked Ethereum ETFs and the most recent developments on this front. Now, why this is important is staked Ethereum ETFs allow more capital to flow into crypto, basically pumping Ethereum to the upside as well as altcoins to the upside as well. And I hope you are as excited for it as I am, because I've been telling you guys about this for basically the whole of 2025, that this is going to be one of the major price drivers for Ethereum and altcoins later this year. And now this is coming into fruition. And the other ramifications from this is that most likely these Ethereum ETFs will use something called liquid staking Ethereum services. And one of the key tokens for that is something called LDO, which I've been mentioning on this channel almost on a weekly basis now. So I believe that LDO token will pump after the staking is permitted on the Ethereum ETFs. Now, this article here just came on July 17th, so this is an update from last week. So Nasdaq has filed an application to add staking for BlackRock's existing Ethereum ETF. And why this is important is when we take a look at the inflows uh, of capital flowing into these different Ethereum ETFs, you can clearly see that last week we saw a huge shift in the amount of capital now flowing into these Ethereum ETFs. And I believe this is insiders expecting that staking will be permitted through the ETFs. And as you can see, just in one day here, we saw an inflow of $700 million. Then we saw an inflow of $600 million. And since then, they have been diminishing, but still we're seeing consistently high inflows into these Ethereum ETFs. And all in all, when we take a look at the total assets in US-based ETFs, the total value is now $20 billion. So this is already 4.3% of Ethereum's market cap, which is still relatively small. But if these inflows continue, then this can suddenly go much, much, much higher. And for comparison's sake, you can see that on Bitcoin ETFs, the amount of capital in these is already 6.5% of Bitcoin's total market cap. And the difference here is 150 billion compared to just $20 billion. So I believe this will go to $30 billion and then higher as the price of Ethereum goes up as well. So all in all, this is pretty much good news. And now let's dive into the actual research of this topic to understand what's actually going on. And for that, let's first take a look at something called Ethereum treasury companies. So there are companies on the stock exchange which basically go into the open market and buy Ethereum as a reserve asset already. One of the biggest ones is something called Bitmine, and then we have SharpLink. And as you can see, today's value in both of these companies is already over $1 billion worth of Ethereum in their treasury holdings. And this is important because they continue to buy more and more Ethereum, but they also stake their Ethereum. SharpLink, for instance, has said that they basically stake 100% of their Ethereum that they receive. And for that reason, investors have basically been buying these treasury companies. But once the staking is allowed through the ETFs, then I believe that investors will opt into using ETFs even more than basically buying through these intermediaries. Now, there's sometimes more potential upside with these treasury companies, so I'm not going to get into that discussion. But all in all, you can see there's 10 companies now, or let's say 9 companies, because Meitu is set at $0 as of now. 9 companies that are using the Ethereum treasury strategy, whereas on Bitcoin, we currently have 40 companies using the Bitcoin strategic asset reserve strategy. And obviously, these have almost $100 billion worth of capital, whereas Ethereum only has $3 billion worth of capital in this Ethereum reserve Ethereum treasury reserve strategy system. So all in all, I believe more money will flow into this and more money will flow into the ETFs. But as time goes on, once the staking is allowed on the Ethereum ETFs, I believe that these numbers will continue to grow on the ETFs as well. So that's basically just the foundation for this research. Now let's head into the actual SEC filing and let's take a look at what is actually being filed in this system. And by the way, I do believe that this will pass because when we take a look at Donald Trump's World Liberty Financial DeFi project, as you can see, they already hold over $250 million worth of Ethereum also as a reserve asset. But this is obviously not publicly traded company, so that's why it's not listed in the Ethereum system. But Donald Trump has a vested interest into basically pumping Ethereum. And they are one of the largest holders on the planet as of now. So that's why I believe the SEC filing will pass. And I believe more capital will flow into Ethereum, obviously. Now, let's finally head over to the SEC filing. So this is, or it has 16 pages here. And the most important part is just in the beginning here. So what will happen is in the existing BlackRock's ETF, they will amend or basically delete the following representation. So this representation basically says that there will be no proof of stake validation. So no Ethereum is used for generating income or staking or anything else. So you can only hold Ethereum. So this part will be deleted completely and this part will be added. So the sponsor may stake or cause to be staked, and this is the keyword, all or a portion of Trust's Ether through one or more trusted staking providers. So they can basically stake all of their Ethereum, and the only way to stake all of your Ethereum is by using liquid staking services. Because as you can see here, when we use the search for the word redemption, they have a clause here as well that the sponsor expects to maintain sufficient liquidity in the trust to satisfy redemptions. So if they want to stake all of their Ethereum, the only way to make sure that you have enough liquidity in the system is to have this liquid staked Ethereum, because for the redemptions for staking Ethereum, it takes multiple days to actually verify it. So if people want to withdraw from the ETF, they cannot do that if you stake using conventional means. That's why you want to use liquid staking Ethereum services. And even here, they use the word liquidity. So all in all, this is the update here. And also there's one more mention here that I will talk about because it basically gives us uh, the next step in this rabbit hole. So the sponsor's use of staking providers for staking activities on behalf of the trust will be conducted through a custodial arrangement consistent with May 29th, 2025 statement issued by Division of Corporation Finance's statement. So now let's take a look at this document here because that's the next piece of the puzzle. So this is the document from May 29th, Division of Corporation Finance. And here they basically lay out 3 ways that the Ethereum ETFs can stake for their clients. So self or solo staking. So this is when BlackRock itself goes and starts a node and starts basically mining Ethereum with staked Ethereum. But like I said, this is not the preferred method because they have to have enough liquidity to satisfy redemptions. The next one is self-custodial staking directly with a third party. So now they will basically hire a node operator who will stake in behalf of BlackRock. And this is also not the preferred part because the preferred part is custodial arrangements, like we read in the document before here, that they will use custodial arrangements. So this is the preferred part because custodial arrangements allow for custodians to use liquid staking services. And for custodians, this is basically the next step in this rabbit hole. So let's take a look at the custodians for BlackRock's ETFs. And for that, let's head over to blackrock.com. So this is their Ethereum ETF. And as you can see here, when we search for the word custodian, you can see that their custodian is something called Coinbase Prime. And that is important because Coinbase is basically custodying the Ethereum on behalf of BlackRock. And unfortunately, Coinbase has their own liquid staking. And previously I was saying that I will believe that LDO will pump up. So this is the part where I was like, oh no, they will use Coinbase's liquid staking system called CbETH. And yes, probably they will use this at least for the part of their staking services. So basically, what what happens here is Coinbase takes the Ethereum and it stakes the Ethereum on behalf of BlackRock. And then in exchange, BlackRock receives these CbETH tokens, which they can then go ahead into the open market, sell, swap, hold, do many kind of things with the CbETH tokens afterwards. But this basically makes the staked Ethereum liquid. But the downside with CbETH as of now is that the total value locked is only $532 million. So if BlackRock is taking in billions and billions and billions of dollars, and they are the only customer for CbETH, they basically completely skew the markets, and it is not as liquid as they would hope. And that's basically where Lido Finance comes in, because Lido Finance has an existing ecosystem which is worth $34 billion of staked Ethereum. There's deep liquidity pools for Lido Finance's staked Ethereum token, and this is a proven system completely. So if BlackRock really wants to be liquid, they will basically have to use Lido Finance's staked Ethereum tokens, at least for part of their system. And as you can see here, when we compare the value of LDO tokens as of now, the total market cap is only $1.11 billion, whereas the amount of staked Ethereum in their vaults is $34 billion. So in my opinion, LDO in this regard is massively undervalued. But now let's head over to Lido Finance and let's add in the next piece of the puzzle. So when we go to the website called lido.fi/institutional, you are entering this website here, and then you can read about the StETH, which is the liquid stake token of Lido Finance. And here, when we scroll downwards, we see something very, very, very interesting. So on July 17th, Bitco has become the first US-based custodian to enable native ETH staking via Lido Finance. This article itself doesn't really give any more details here, but in my opinion, the key detail in this whole article is the date July 17th, because this date is the same exact date that Nasdaq filed for BlackRock Ethereum ETF staking. So I don't think that is a coincidence. And now the question is, does the Bitco, will it offer custodian services for BlackRock or not? So that's when I started to research if Bitco already provides custody services for existing Ethereum ETFs, and for sure it does. So Bitco will serve as a custodian for 21 shares US spot ETFs. And now when we compare the 21 shares US spot ETFs compared to BlackRock, unfortunately, this falls a little bit short. So this is the 21 shares ETF, and as you can see, they only have $44 million worth of capital as of now. But as Bitco becomes a custodian for Lido Finance's liquid staked Ethereum, at least this ETF here will use Lido Finance's liquid staking system. So at least one of the Ethereum ETFs will use Lido Finance, which is a good thing. And then obviously when we compare it to BlackRock's ETF, this is $10 billion worth of value. So if some of this money will flow into Lido Finance, that is obviously great because it would make LDO token a institutional asset as well. But but BlackRock will not necessarily use Lido Finance, but I believe it will because Lido Finance basically hosts 75% of the all of the liquid staked Ethereum tokens on the market as of now. Is a clear market winner as of now, and now they have a US based custodian which is already involved in the Ethereum ETF game. And then the next piece of the puzzle is will BlackRock change custodians from Coinbase to something else? And for that, we have an article from April 9th of 2025. So BlackRock has announced that it will diversify crypto custodians to include Anchorage Digital. And this addition here only includes Bitcoin. So here there is no mention of Ethereum. As you can see, this is only about Bitcoin, but they already have a history that they are not stuck only with Coinbase. They have a proven track record of diversifying their custody services from Coinbase to also include Anchorage Digital. So in my opinion, it would make sense that they will also include Bitco in the near future. So this is basically my research as of now. And just to add a little bit more information, there are multiple different ETFs here for Ethereum. As you can see, we have Grayscale, we have Fidelity, Bitwise, we have Van Eck and Franklin. I know Bitwise, at least as of now, it has $500 million worth of assets in its Ethereum ETFs. It is currently using Coinbase custody. And Fidelity, they actually have their own custody service. So when we take a look at the Fidelity Ethereum ETF, they basically are proud to say that they are the first traditional firm to onboard and custody and institutional managers Bitcoin through Fidelity Digital Assets. So Fidelity is its own custody provider. And Fidelity, by the way, previously also had filed for staked Ethereum ETF through the SEC. And this decision, in my opinion, is still pending. I'm not 100% sure, but this news came in March 12th. So maybe Fidelity will also use Lido Finance. It would make the most sense. It could use something else. We could see a couple of different companies starting to use different liquid Ethereum services. But just in my opinion, Lido Finance would be the number one choice for many different Ethereum ETF providers, especially now that Bitco, which is the proven custodian for Ethereum ETFs already, is adding the Lido Finance's liquid staked Ethereum. So this is basically my research in its in its fullness for now. Now, maybe if you don't know what is liquid staking Ethereum, you can watch another video for that. But all in all, that's basically everything I have on this topic. Currently, I'm longing LDO like crazy. As you've probably seen, I'm using leverage, I'm using spot markets, but this is basically the asset I'm pretty much most bullish on in the whole crypto space as of now. And I hope I'm right. I could be wrong here, but in the scenario that I'm wrong, they still have this $34 billion in their vaults of staked Ethereum. So if Ethereum goes up in price, as Donald Trump has a vested interest to pump it and to approve all of these metrics, then I believe that LDO will at least go up together with Ethereum. But if it becomes an institutional asset, then probably LDO will reach like $6 or could even go to $10 from now, whereas the price as of now is just is just $1.1 or $1.2 based on when you watch this video. So all in all, I'm pretty bullish on this. That's basically everything I had for you guys in this video. I hope you got value out of this. Let me know in the comments if you agree with my assessment, and let me know what you thought of this deep dive research. And in the future, I'm looking to make more deep dive videos into other altcoins also throughout this bull market. So subscribe for those kind of updates also if you like this. Anyway, that's it. Bye bye.